Markets going down after a week with a new war. Jerry Gidel is ready to analyze all the full picture right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So, Jerry, we had plenty of data going on this week, and also another war declared between Israel and Hamas, and with a big potential impact on the energy markets. So we ended up the week with soybeans going lower.
Well, I think this week was definitely another classic choppy market in the world of agriculture. We ended up having the first part of the week, like you mentioned, talking about concerns about another economic impacting war here from the standpoint that not so much from our U.S. corn and soybean productions, but primarily from the energy world and the impact on fertilizers and things of that nature. The whole input side of the markets. If we had a further outbreak of the Hamas and Israeli war that broke out here earlier this week, and also this caution ahead of the USDA's October crop report kept things on a sluggish note ahead of that report. But wow, what a change we had when the numbers came out from the standpoint of the October levels at this point. You can't really say that the numbers were outrageously lower. It's just the fact that they were at or near the very close to the bottom of the range. Everybody is always a little cautious about October because of the potential of less information than they've had maybe on what kind of yields we might have in the U.S. Earlier in the week, they reported only 23% of the U.S. harvest was completed, and that was even slightly past the 1st of October. And so that meant we had 75% of the crop still out there in both corn and soybeans. And so that to some extent, the yield numbers that they released, which actually were 0.5 of a bushel lower on beans, and on corn it was 0.8 of a bushel less. I was kind of looking for 1 bushel down, and actually I was only looking for 0.4 of a bushel down on beans, and that's just because of the fact that we're just likely to get more information and that later on. But both of them, these levels of reduced yield is tightening our potential supplies of 2023-24 U.S. crops. And so that and the weather event that's started moving in at the end of this last week, moving across the Midwest, that really then also shut down harvest, I think combined to prompt a lot of technical short covering, and it kind of fed on itself. And so we had quite an impressive performance there on Thursday across the board. Even wheat's higher stocks report for U.S. carryover stock, because of the larger U.S. wheat reported on the small grains report, got overrun by the enthusiasm of both corn and soybeans. So that was the big overall kind of factor in here that kind of set the tone going into the weekend.
Yes, and I think another thing that is impacting the markets is the fact that there is less demand from China. The number from September for soybeans, there was a decline of 23.6% of soybean.
Right. The actual imports into China are always watched in that, but I think the twist of of it is that we even on Friday here, we had another unknown destination soybean purchase here. We've had quite a few of those. We've had it's an interesting twist. You also have to look, and unfortunately, we don't have a chance to look inside of the USDA's total statistics, and to some extent, even China's purchases from Brazil. I think that was maybe just a lull in shipments arriving in China versus the actual purchases they made recently. To some extent, they're going to continue to be dependent on both Brazil and the U.S. for soybeans. There sure isn't going to be a lot of available beans in Argentina. There's lots of concerns down there that reported this week that after the export sales they've made, and that the crushing industry is getting crushed by the fact there's no soybeans down there for them to process. And lo and behold, here on Friday, the USDA announced I think it was 110,000 ton sale of U.S. soybean meal to unknown, which is highly unusual that the U.S. sells meal. We sell soybeans. We sell occasionally some oil around. We haven't sold much oil, though, because of the huge demand for renewable diesel in the U.S. But in general here, the South America's issues on Argentina continue to be a factor here. And the only unfortunate thing that came in on Friday was the fact that we had a weekend, and we had potential for producers to decide that maybe they should be selling some stuff after the rally, and so the market dipped ahead of that. I kind of feel like that's also going to end up limiting the sales that actually will happen here, and particularly since we're at the prices we're at right now. I think most producers are willing to hang tough, and they're like all of us. They're still trying to figure out what kind of yields they're going to have. The first part of the harvest has been mixed and to some extent disappointing. A lot of times in the past, late yields have improved, but I'd have to say this year there's still a lot of caution on that because of the late dryness that impacted across the Midwest here, starting in mid to late August and all the way through September.
Yes, and I think another thing that we should look forward is that China has had a lot of economic setbacks, as you mentioned, with the export numbers.
True. The other one is probably, and is quite interesting, is that on this Friday update of overnight sales, China was reported buying a second batch of U.S. soft red wheat. Highly, highly unusual. Basically, that's your wheat that is utilized in cookies and cakes. The Kansas City wheat is your bread wheat, and so that's the second time that they bought U.S. soft red wheat this year. Actually, maybe in the last 6 weeks or so, and that's an indication. Now, why did this occur? It's because of the unusually bad weather they had back in July, where there was a huge typhoon, I think it was, that hit the mainland of China there right when they were harvesting their wheat, and so that really turned that quality of that wheat into the best feed, and in some cases just made it unusable. It basically from there, and to some extent that wheat that turned into feed because of the wet weather, that really kind of compensated in the corn market. To some extent, you can't feed 100% wheat versus corn, but you can utilize that particular grain as a portion of the rations. To some extent, it's highly useful in feeding beef and cattle, but chickens and hogs, even at the best, you want to do 40 maybe a stretch it to 50% of the ration. You still have to put corn because, unfortunately, a simple stomach animal or bird, the wheat grain with the gluten in it will kind of swell up inside of the person's, or excuse me, the bird or animal's digestive system, and all of a sudden that's no good either. So, but anyway, moving on, that's been a factor in this thing that impacted the corn earlier. But also, I think they just mentioned here that they have had other issues over there that switched some of their purchasing this year going forward, and from that point, so I kind of feel like that the wheat market has really had its issues this year. We've had declining world production prospects from Australia, Argentina. India's upcoming wheat crop is not looking all that great. And the U.S. did have a nice little boost on its late productions here. But overall, very tight situation there. And seasonally, we usually have some strength between Labor Day and Thanksgiving, but I'm not sure that it's tried a couple times, but our friends in Russia are continuing to be a very aggressive seller, so it has been kind of beat down. We'll see what happens over the next month, though. It could still have some strength here as we go into the late stages of the fall shipping season.
Yes, and another thing that I don't want to skip, even though it's always the same news every year, is the first CONAB numbers about Brazil, the Brazilian crop. So I think it's a little bit what China is looking at right now about regarding the trade.
Yeah, I think your voice kind of cut out there, but I kind of feel like that. Yeah, it has been an ongoing kind of saga in South America about their planning situation. It's been kind of a twist this year. The southern parts of Brazil, Rio Grande and Paraná, which are significant producers, but they are really the what provides the early part of the domestic markets for corn and soybeans, and that. But Mato Grosso is really the big producer down there, and it's been kind of shaky down there as to it hasn't really had the great beginning spring rains to get producers out there and getting their beans planted. Now this is, here we are approaching the middle of October. This is kind of the end of their best part of their planting season. They'll still plant up till November, even maybe even to November 15th. But that also does extend their harvesting of those beans past. There's always people talking about beans being harvested in Brazil in January, but the amount of that is pretty modest. In reality of it is, most of it's at the first is kind of zeroing in late February and March, and these beans that are being planted here in November could easily be some that won't be available to the markets until April. So to some extent, that's this another interesting factor in here that will impact the markets as we go forward. But right now, I think the South American planning situation is there, but I think the U.S. is and the world is going to be focused on what kind of yields we get here in the U.S. and how that trend is going on. One of the things that I and another analyst were talking about after the report was the fact that one of the tendencies of U.S. Corn and soybean yields is that if September and October yields both decline, then the final yields tend to also have a smaller level than where we started. And that could be interesting to some extent. The weather suggests that the other things involved, but from the standpoint of our yield reports. But that I think is really an interesting right at this point. If we all of a sudden saw another bushel and a half on corn, that would probably take our carryover stock down below 2 billion. And on the soybean side of things, we're sitting here at 220 million carryover stock. Once you get below 200, I think things always get a lot more interesting. Now, the problem becomes is that with the world continuing to look at South America's output and they becoming a major supplier of soybeans for sure, and on corn they're rapidly becoming a big supplier, particularly second crop corn out of Brazil, and that. So I really feel like that we're going to be watching our U.S. yield responses over the next 6 or 8 weeks, but longer term, it's what happens in the southern hemisphere will be a big factor. That will also impact Australian wheat, Argentine wheat, and also corn and soybeans. So we've got an interesting few days ahead.
All right, I think that's it for now, Jerry. Anything else would you like to add?
Well, at this point, excuse me, the markets we've been slugging it out here for about I don't know, anywhere from 6 to 8 weeks in prices and that, and I think the reaction we had on Friday was the kind of was the fact that people were starting to say, "Oh, well, this market's downside's limited." Yeah, I think the other factor, fundamentals are important to the world, but a lot of people trade these markets technically, in that because the investor out there and the big funds, they watch price trends and directions and things like that. And if we see the chance to see these prices move above $13 and also $5, these things could start to get a little seasonal strength, which usually occurs between late October, mid to late October on up to Thanksgiving, and that. So late November. So I think that's another factor that's coming into these markets is that the investing community is starting to look at where things might be. And we have more and more problems about getting crops out of the Black Sea, and our U.S. crop sizes are maybe and yields are not as strong. I think all those things could be a factor. Right now, though, we're going to continue to watch what's going on in the Mideast and its impact on the world energy prices, and how the U.S. Harvest picks up after this rain event, which is going to continue, it looks like, into early this coming week. So right now, at least, though, maybe we found a place to find a sideways to higher market here after the USDA's October report.
All right, thank you very much.
Have a good day, sir.